Like, I've lost my business.
That's an extremely difficult position to be in.
They're like, what do you mean AGX isn't paying the truck?
How do you explain to a customer what's happening?
Jumping off a 500-foot bridge without a parachute.
They're probably being harassed nonstop also, right?
I needed to look at somebody else in the mirror than the white bearded guy that just lost his company.
So are you still in the state of shock?
AGX Freight, it's all over the news, and I'm sure you guys are wondering, what in the world happened? Well, today I'm interviewing Mike Williams about the recent shutdown of AGX Freight. We're gonna dive into the key factors behind the shutdown, including the dispute with their senior lenders that literally froze their working capital. We're gonna be asking the tough questions, but not by a reporter, by a fleet owner. So we're gonna get to the bottom of what happened and explore what's next for AGX Freight and the industry. This conversation is crucial for those of you that are in our industry so we can understand and learn in order to grow together. So let's get in there and ask them those questions.
Today is just, what can people learn from this experience? And I'm trying to maybe go into the angle of the powers that the banks have and how brutal they can be. And I think that just from, just the articles that I read, I think you've had probably the worst experience with them. So I guess maybe we can introduce yourself to the audience and,
Sure.
And I'll take it from there.
Okay. I'm Mike Williams. I'm the founder at AGX Freight back in 2016. We actually rebranded a trucking company that I purchased out of Rome, Georgia, which is northwest of Atlanta. And it was, 2016, we did a deal with the owner of that business and then relocated the business down to here, and we set up shop in Jacksonville.
So when you purchased it, how many trucks did it have?
It had 85 trucks and a couple of hundred trailers. Our business model is an agent model. Mm-hmm. So we actually turned that terminal up in Rome into an agent of the company, mm-hmm. and the corporate headquarters relocated to Jacksonville.
Which is where I am right now.
Yes, we did start in a smaller office for the first year or so. We moved in here in August of 2018. So it's about 9,000 square feet. We had this place filled. I don't know if you walked around. It's a bit of a maze, but mm-hmm. This was our brokerage floor here. Probably had 35 people in here at the height. Wow. And then the other side of the office was essentially the back office, business administration, safety and compliance.
Receivables, payables.
Receivables, payables, finance, technology, all of that. And conveniently located for a lot of the workforce. So we were really happy here.
Now, did you have a trucking background that you entered it in 2016? Or?
So prior to AGX, I was at Suntech Transport out of South Florida, Boca Raton, that mm-hmm. ultimately they grew. I was there from 2006 or 7, end of 2006 to 2014, and we had it was another agent-based business, brokerage and asset-based, but what we call truck agents, and owner-operator equipment. Definitely leased trailers from typical trailer vendors, but we ended up with close to 1,000 trucks at Suntech. That trucking division was sold to Evans back in 2022 maybe, and then the brokerage was sold to Mode in the same kind of time period. But I left in 2014.
So you've been in the game for a while?
Been in the game for 25 years.
So I read some articles, but I think our audience needs a little bit of background information. What has happened in the last couple of weeks?
Yeah, so we got notice from a lender that we get our working capital with through a credit facility, mm-hmm. That a co-borrower, R&R Express, out of Pittsburgh, had defaulted on certain provisions of the loan package, and therefore the lender was cutting off access to the working capital. And in this business, you've got to be able to, pay your trade payables, trucking companies that are hauling the freight for you and your customers. And of course, agent commissions and payroll and just all the expense of the business. I mean, we needed $1 million to $1.3 million of cash every week. And we had the working capital on our balance sheet and in our own kind of self-contained operation here in Jacksonville. But because we were connected to the R&R family of companies out of Pittsburgh,
Can you just explain a little bit about this connection?
Sure. So back in 2017, R&R Express helped me close out the purchase of AGX with the gentleman that I bought the company from, and became a part owner in the business. And one of the things that we benefited from the relationship was access to working capital. We were, in 2017, we were still in essentially transition mode. We had, as I said earlier, we relocated the corporate headquarters of AGX from Rome down to Jacksonville. And so we were, just standing up the business. And so R&R, who was in the market looking to grow their business, we entered into a transaction with R&R, and we became a co-borrower on their basic credit facility that they were in the process of closing at the time.
So they had a lien on your receivables?
So part of that lending structure is it's a senior secured lender. They have a first position in the receivables being the primary fluid liquid asset. And then, everything else is basically tied up in that loan structure.
So when R&R went under, or when they, when the loan was called probably by the banks, they couldn't pay it off. And therefore they went under and tied you into the loop of things.
So in basic terms, the bank's liens extended across all of the assets of the R&R organization and extended into the AGX organization. Now, on a standalone basis, that's not a problem. We have working capital on our balance sheet today to operate. We could operate, but for the liens that are really there now to collect money that R&R owes the bank. And so, the situation is, it's I'm sure it's unique. I mean, this isn't typically the way a broker, like the typical way a broker goes out of business is more the R&R path, where you end up just, growing too fast. You're, on that revolver type lending arrangement. You're essentially borrowing carrier pay if you're funding growth, if you're expanding and making acquisitions and maybe buying equipment and buying properties, as it's alleged in some of the publications, news stories that are out there. And then, through rapid growth of the COVID, because that was big for, the freight logistics companies, and then the freight recession the last 3 years. So you grow and you grow, and then you kind of go down a little bit.
So what happened to AGX asset-wise during COVID? Did you guys also grow?
So we did grow. We had our best year in 2022. And, it was just a crazy year, right? Crazy
How many
year.
trucks at the time, assets?
We were about 130 at the time, yeah.
And then of recent, how many assets altogether?
So we were down to about half that, at the end of December.
Half of that.
So yeah.
Okay. So walk me a little bit more about the R&R. So you received the letter, or you received, there was no way to pay them out? There was no way to get a factoring company in here to try to buy out the arrangement?
Yeah, so that was the plan. We had a new lender lined up, and we had been working with the new lender for about 2 months, maybe 2.5 months going into January. So fourth quarter of 25. And there were a lot of things going on that were on the runway, so to speak, ahead of us with respect to R&R and their dealings with the bank. And we were essentially waiting our turn. There were some other transactions that occurred where R&R sold off some other properties, and those things just took attention from their senior team and the bank and the lawyers, et cetera. At the end of the day, though, the arrangement for purchase price and how I was going to refinance the bank and basically pay off R&R's position in AGX, essentially we hit an impasse at the 11th hour because the bank wouldn't release their liens for the purchase consideration that I had with the team at R&R.
Have you ever tried to exercise this option before, like the last 6 months?
Yeah, we had been working on essentially restructuring the ownership of AGX as well as financing. It's been difficult just because of the challenges that R&R's had. I mean, it wasn't necessarily a sudden blink of an eye for R&R. The market kind of saw it coming. With AGX, though, nobody would have any reason to understand or think or believe that we were going to be caught up in this, and we had no expectation, from a glass half full optimism. We're going to make it through, have financing in place. I have a deal structure and a price that I'm being underwritten for. I have the ability to close the deal. And the bank ultimately determined that the value that I would pay at closing was insufficient for them to release their liens. And there was about a 3-day window of back and forth, and then they just finally, said, forget it. And that was it. I had no choice from there. So the financing that I had in place and the capital that I had in place, paying off the bank's requirement would have left me in the $2 to $3 million short of working capital day one after I paid the price. And I had no expectation that I would have to overpay for the business like that. So I wasn't prepared. There wasn't any time. The R&R thing hit the wall. And
getting another lender to pay out like the receivables, they wouldn't.
No.
There wasn't like sufficient.
Well, we again, on the R&R side, they've got big problems. Mm-hmm. On the AGX side, I could replace the current lender with a new lender and pay the agreed price between myself and R&R, and I would be in business right now. There wouldn't be a story about AGX. We would be on our own, plugging away.
So what happened to the drivers, the trucks?
So we were concerned going into the end of the year. We had been, we had been losing money in our trucking operation based on a variety of things, all the factors and costs.
Just so you guys are aware that everybody was losing money over the last 18 months. It's not just a.
Yeah, it'd be irregular if I said we were making money and oh my boy, we had to shut down the trucking company. But the rates, it's hard to understand the market that buys truck capacity would allow prices to fall. And again, I realize a customer, they want the freight moved as cheaply as possible and safely as possible in a lot of cases. But there's a certain, trucking companies aren't, banking a bunch of money. I mean, they've got truck expense, maintenance on the truck, fuel, driver, insurance. just to name the highlights. And we found it almost impossible to, figure out how to dial in compensation structure for the truck and the driver, while also, offering competitive rates to customers for them to actually say, okay, we'll use your truck capacity at these rates. And so it was always a kind of a back and forth, internally, but they're owner operators, right? So we were able to find them new homes. I believe, I'm not sure exactly where they ended up.
What happened to their pays, or did a lot of them get paid in full, or would you say that?
Hey, do you have a product, device, or service that can benefit the North American trucking market? Well, guess what? You can become a featured sponsor in one of our next videos. With a vast community of over 700,000 subscribers across all of our platforms and an impressive 3 million monthly video views, I can definitely bring your product out to the spotlight. You want to be part of our community? Join all of these companies that have already partnered with us. Interested? Email me at sponsorships@ettransport.ca. And now, back to the video.
What happened to their pays, or did a lot of them get paid in full, or would you say that?
All the drivers, all the trucks that were running AGX on the side of the cab, they all got paid. Everybody's been paid.
Perfect.
It's the trucking companies that our brokerage owes that is the hang up, and that's my mission imperative right now, is to find a way to get the trucks paid.
How much payables are there approximately owed to these?
Several $1 million. Yeah, it's not insignificant. And we've just met today, Ronan, but my personal brand is integrity and trying to achieve excellence, realizing that it's very hard to get to the highest level of service to your stakeholders, internal and external. And throughout the course of our 9-ish year run, our number one thing that we were so proud of and took as serious as you can take it, the truck has to get paid, right? These guys and gals that are out there with a very difficult, lifestyle on the road. Some really enjoy it. They love to get out and see the open highway. Others, it's a job, and it's a tough job, and they've got to get paid. And in this particular situation, I've got things I'm considering, and my goal is to get them paid. Like, I've lost my business, but there's, I lose my reputation, and my integrity is challenged if I don't get these trucks paid. So.
Yeah, that's probably an extremely difficult position to be in. How do you explain to a customer what's happening? Like manufacturing plants that you've been working with probably for years, how do you pick up the phone, or they're probably being harassed nonstop also, right?
Yeah, a lot of carriers are finding their way to the customer or, the bill of lading parties, because they have the paperwork for the load, obviously. And many of them factored their invoices with us. And so I think the prevailing...
And I think most of the factoring companies had you on no recourse, right?
Well, we had earlier I was going to say that we've prided ourselves on, having an A triple+ credit rating in the carrier market. And that's just, you have to have that. And we accomplished that. We maintained it. The internal team here that was responsible for, processing transactions accurately, getting the customer invoiced, settling to the truck, and just meticulous about it. Part of the reward for that hard work was when, truckstop.com or, Ansonia would report that, we're A plus, A plus plus. And you know, and so the customer and the carriers, you know, they're finding out about this in the last couple of weeks, and they're shocked. They're like, "What do you mean AGX isn't paying the truck? That's like, you know," as I saw somebody on social media said, "That wasn't on my bingo card." You know, it's like nobody would have thought that, and that's because under our approach to business, we certainly tried to grow. I mean, we hired people. We tried to grow the business, grow sales, grow transactions, add new agents, add trucks, go lease trailers. But we didn't get so far out ahead of ourselves that when, you know, COVID, you know, post-COVID freight recession that nobody knew was going to be 3 years, coming up on 3 years anyway. Nobody thought it would last that long, but we were, you know, disciplined in our approach to budgeting and you know, not being too aggressive trying to grow. So, but for the situation with R&R and those liens, even if I was which we're out of business, but you know, I have balance sheet liquidity or balance sheet net assets to have all the carriers be paid off of our balance sheet. And it's the money on the R&R side that is being collected and paid
So
over
your
here.
receivables right now are going towards paying R&R's debt with the banks.
Correct.
Wow.
And that's just doesn't seem like the way it should work. And you know, and again, the bank obviously has its position, and it's got, you know, reams of paper agreements and all the details of what that kind of credit facility looks like. They've got good lawyers that work with them, so you know, it'll be a challenge. But this isn't a situation where the principal of the brokerage runs away and hides. And you know, one thing I want to be sure I try to do today for you and your viewers is not to make excuses. It's really to explain. And then, you know, anytime you have a problem, it's always, well, what's the solution? So that's what I'm looking at now. Kind of what can I do to
So
get
at
the
the
carriers
forefront
paid?
is trying to get these carriers paid up.
Yeah, it's unconscionable that the carriers wouldn't get paid. It's absolutely unconscionable.
Is there any recourse against the bank, against R&R? Is there anything that you can, you know, tie your hands to or your claws on?
So you know, you can.
Or is it a little too much to say on?
Yeah, I mean, look, if any of that stuff does happen, anything like that, it'll certainly be, you know, in the public domain, but it's not right now. It's, you know, we're trying to, you know, when you're going concern business and then you just stop in the blink of an eye, literally within a day or two, you're like, all of a sudden you're not doing business. Like we're not on the phone moving freight, it just stops. And we were doing, you know, 800, 900 loads a week in total across, and all of a sudden just gone. And so there's stuff, there's cleanup, there's wind up stuff, administrative stuff. And so really want to, like, the carriers, absolutely, that's going to take, you know, a big effort of some sort, but a lot of the loose ends around, you know, just the electric bill, the landlord, all that kind of stuff we're working on as well.
If you could take back time, what would you do differently when it came to the R&R and the loan? Like, how would you have been able to structure it properly while getting the funds, but also securing that something like this wouldn't happen to you?
Yeah, so the relationship with R&R was great for more years than it's been bad. A lot of good people in Pittsburgh. Coincidentally, I was born in Pittsburgh, you know, originally from Pittsburgh. So I always thought it was, you know, personally interesting to me that, you know, as I left that Suntech organization, I was going to go try to do my own thing. AGX, and I needed working capital assistance at that time, and R&R was there.
So when we mean working capital, you mean above and beyond of what your receivables will allow you to factor?
A revolver, which is basically you have your AR, and there's a weekly or monthly borrowing base analysis that you do, and you're able to draw some percentage of your eligible AR, and that basically represents your working capital capacity, what the lender will advance against your available AR. And
what is that amount in the U.S.? I know in Canada it's about 75%. Sometimes they'll push it to 80%. If you have insurance, it'll be 90, 95%.
Yeah.
In the U.S., how does it work?
It can get to 90% with using a credit insurance agency to support those receivables. Cash comes in, it flows obviously, customer receipts, carrier pay, payroll, all the other expenses that you have, insurance, downstrokes, and claim out-of-pocket money for claims. And so you need to be able to access. You can't wait, for a customer receipt to come in so you can clear a check. You need to have, essentially, at our stage, throughout our 8 or 9 years, we needed that kind of revolver. So if we had, in this here, I'm just going to give you an example to illustrate kind of the percentage of what our borrowing was. So we had availability to borrow up to 85 or 90%. And let's say it was $10 million, so you can borrow $8.5, $9 million. We hovered in that probably 25 to 30% of the availability. So we had, in that example, millions of dollars of
$2.5, $3 million of available.
Well, so if it was $9 million of borrowing capacity and we were borrowing about $2.5 million, we had $5.5, $6.5 million of capacity that we did not tap. We did not get into. That sat there, and that's ultimately, money that left the AGX organization and went
to pay off the R&R.
Yeah.
Wow, that's a lot of money.
That example is a higher end of the numbers. 2025 was not a great year of growth for us, so those numbers are lower than that for 2025, which is kind of the last stages of this whole thing. So it was, as I said, a very good relationship until, it just kind of got away from the guys up in Pittsburgh. So
it's been less than 10 days. Are you still in the state of shock, or like that this has actually happened? Or?
It is shocking.
Like how fast has this place been emptied out?
2 weeks.
Within 2 weeks?
Yeah. I mean, we had probably 30 to 35 employees. This room was probably half filled, and then the back office over there was probably half. We had downsized and really trimmed our expense structure going into the refinance of the current lender. That deal that was, by all accounts, should have happened as far as I'm concerned. I did an interview with the Jacksonville Business Journal a couple of weeks ago, and I described, their final offer as, jumping off a 500-foot bridge without a parachute. And there just wasn't, it was great for the lender because they would get paid and, maximum of their value of their collateral. But, the deal, I didn't have millions of dollars more, going into the deal, and we just ran out of time.
So going back to that question, what would you have done differently with the R&R relationship if you could have taken back, so you're not dependent on them or they're not dependent on you? Like, was there any way to do the paperwork that it wouldn't?
I could have exited earlier in the, coming out of COVID and before the freight recession really, stepped on all of us. That window of time was probably the time where I should have made the judgment call to go ahead and just not because anything was going wrong or anything had soured. The purpose of the relationship was no more in that time frame. We could get financing, without the being the co-borrower with R&R, and we actually were prior to that, but COVID really kind of just changed everybody's options on the table for what to do next. So we were, and what COVID was that 2020?
Yeah. But the after effect. I think
Yeah. So
the best years were end of 2021, and then 2022. The first 6 months, I think, were the I know for us it was within 3 months. I don't think we made enough. I don't think we made as much money in 2 combined years as we did in that 1 quarter. It was just numbers that were never heard of, and I don't think we'll ever see it.
Exactly. And those big numbers, that's what drew all the excess, what is now excess capacity. I mean, $6 a mile, $7 a mile, people are running into the market, and you're buying trucks for 2-3 times what they're worth today. With the freight recession and lack of that demand and those rates. But the first couple of years we were growing into ourselves. We were having a lot of success, kind of doubling in size the first couple of years, and then COVID we shot like everybody did, and then coming out of COVID, that was the window where, as I said, I should have.
You were able to pull the trigger, and then closer to 2024, 2025, it was already impossible to take them out because of the freight recession.
Exactly. I would say that's a fair summary of it. Yeah.
I see you have a healthy balance between brokerage and trucks. Would you say that the trucking side for the last 3 years, I mean, what it was it the brokerage side that was keeping it alive, or it's one offsetting the other?
Yeah, for sure. We kept with the trucking because I'm a little bit stubborn in that regard. When we started in 2016, all we had was trucking. We had no brokerage in 2016. It was just an asset-based trucking company. And, our goal was, my original business plan was, basically get brokerage revenue to about anywhere from 60 to 65% of total revenue, and have truck be the other side of that. And it was kind of competitive. Like the more brokerage would grow, the more trucking would have to keep up with it to keep that relationship of 65-35. And we had some good folks running our agent terminals for us. That when you bring a truck agent on board, and they bring their owner operators and their customer relationships. I mean, they're not coming over to for 6 months or a year trial. I mean, they're coming in, as far as they're concerned, they're going to be lifers, because changing the name on the side of your truck and new ELD systems and just new for essentially an asset-based truck terminal. You want to minimize that turnover. It's painful. So we stayed committed to the truck side, through periods of real struggle, to make money. Brokerage definitely allowed us to, kind of subsidize that for a couple of years.
I want to steer in a little bit of a different direction. I want your intake on like the last 2 years when it comes to fraud. How much more fraud have you seen in the last 2 years than you've had probably in the previous 8 or 10 years?
Unprecedented. It caught us by surprise, and we were actually victimized by some kind of theft operation. Not sure, it's hard, when you're sitting in Jacksonville and you don't necessarily see the trucks. I mean, you see pictures, you see driver's license, you see what carrier information is available on highway and the government websites. But in reality, a truck and a driver and a warehouse and some fraudulent paperwork, I mean, there's a lot of room to roam out there. And I think various criminals have, we call it fraud, and maybe we don't want to disparage and call people criminals, but I think it's essentially criminal fraud. And it's terrible.
It's terrible, especially in the last 2 years.
It's unbelievable.
What's your worst story? I got some really good ones.
We're actually a defendant in a New Jersey federal district court case from one of our customers for a bunch of stolen loads of electronics. And we're trying to get that case settled with our insurance company. And what the insurance companies are doing in the United States anyway is they are, and again, our policy doesn't have this cap on it, but new policies probably starting second half of last year and going forward. A lot of the broker contingent cargo underwriters are putting aggregate annual caps on exposure for stolen loads as a result of imposter carriers or fraudulent actors that are basically doing anything from the email phishing scams to basically, what I saw was carriers that kind of planted themselves years prior to build the years of experience on their government license, and that record that every broker looks at. Hey, how long have you been in business? Oh, 3.5 years, and there's no freight guards, and it looks like a clean carrier, and they're giving you a good rate, point A to point B. And it turns out that those are like sleeper carriers, and they just pop into the market for a 30-day run before anybody figures out what's going on, and they steal as many loads as they can, and then they disappear. And
in that case that you're involved with, how many loads were we talking about?
The case in New Jersey, 25 loads.
Wow.
In a 90-day period of time.
25 loads.
In a 90, we were moving hundreds of loads for the customer at the time. So 25. When you look at 25 loads as a percentage of an annual volume of business, or as a percentage of the 4 or 5 years we've been working with them, it's infinitesimal. So that's no excuse for it, but it...
Over the grand scheme of things.
Yeah.
But when you think of 25 loads that are electronics, it's 200,000, 300,000 a pop. That's...
I think the lawsuit is, I think the total is about $3.5 million.
Wow. So they're going after the insurance company that doesn't want to pay out.
So the insurance company is TT Club, which is out of London, and they're not happy with the claims, and so they're fighting coverage, I guess you would say.
Got it.
Yeah.
What have you done, in order to minimize these? I mean, I know there's a lot of new technology out there.
Yeah.
That have new companies that have surfaced in the last 2 or 3 years that really are doing a great job, but things we could probably do a lot better or a lot more. Yeah,
I mean, there's obviously more good and great carriers out there that are legitimately trying to earn a living and, haul freight for whether it's brokers or direct shippers. The industry really needs their help. I mean, the legitimate good actors, the quality carriers, I think need to, again, the broker has to do a certain amount of, a lot of due diligence, right, to verify that they're dealing with a legitimate carrier. But I think the ones that are legitimate should be willing to, distinguish themselves and show the difference between this is a truly legitimate carrier, these are the hallmarks of a truly legitimate carrier, and even to go as far as to submit just further proofs of who the owner of the business is. You know, do they have bank references? I mean, do they have legitimate, you know, third-party sources kind of validating that this is a good actor, a good company, you know, that's going to, you know, simply haul the freight safely and for a fair rate versus a, you know, an illegitimate carrier that, you know, I just, you know, in my mind, you know, the bad guys will obviously find out what those attributes of a good carrier are, and they'll try to mimic those. And so they look like the good actor in the market. You know, okay, well, what are the next 5 things the good carrier can do to, again, break the, you know, create a separation that the market can clearly see? And whether it's one of those highway tools, the highway.com company that we were using here.
Yeah,
and
we use them also.
even their products are, you know, they're not perfect, and
sure.
you know, and it's hard to think about what that perfect tool would be. But can't give up, can't not fight what's going on.
So what's next? What I know you touched on, you know, your goal is obviously to pay the carriers, but what you need a break from all this, or you have something already lined up, or you're thinking in a certain direction?
We were a micro-cap public company, believe it or not, for the duration I was there. And we sold the company to private equity in 2013. And I left at the end of 2014. And, you know, I sat out, you know, a period of a non-compete. So I was out of the market for all of 2015. And, you know, I had I had enough decent choices of what to do. I was either going to go work for a company and be a member of the senior management team, or I was going to, you know, kind of, after working in an agent model for so many years, you know, at Suntech, and even prior to that, was really, you know, truck drivers are the same. The entrepreneurial spirit in this industry is just remarkable because the barriers to entry are so low. It's big rig trucking across the country, but you can really be a small player and get in that big market. And so it's super competitive, obviously. And, you know, be 59 on my next birthday. Not that age matters, but...
I thought you were a lot younger, to tell you the truth.
Did you really?
Yeah.
Well, I usually have a big white beard. I shaved it off when we lost the company a couple of weeks ago, just for, I needed to look at somebody else in the mirror than the white bearded guy that, you know, just lost his company. But no, it's, I have ideas in my head what would be kind of ideal, but, you know, I'm kind of keeping them close to the vest at this point. I doubt I'm going to start another freight logistics company. I don't think that's on the table. But
I wanted to get your opinion. I've been reading a lot of articles about dispatch services out of other countries.
yeah.
What's your take on it from, you know, the brokerage perspective? Did you care? Did you mind?
It was a red flag for us, just as a general variable in the mix. You know, I was, you know, active with TIA, Transportation Intermediaries Association, and the association was pretty worked up about dispatch services, and I think rightfully so. Basically, illegal brokering. You know, the basic definition of a dispatch service is that you work for one carrier, essentially. You're dispatching the trucks of one carrier. And when you mix it up and you have multiple carriers that you're now finding loads for, that really, you know, pretty, just in simple terms, you know, quickly looks like brokering. So without the license, without the, you know, the surety bond and, you know, just the registration process with the government, I think the dispatch services are probably, you know, wide open for potential abuse or mechanisms for, some of the stuff we talked about earlier. That said, there's probably plenty of good dispatch services. I've known a couple of people in my network that wanted to start one and did, and they didn't really ask my opinion, and I didn't give it. But I know those are good guys, and they weren't doing it to cheat anybody or do anything wrong. They just figured it might be another way to make a buck. So, but the foreign located dispatch services, I think a lot of the freight fraud is attributable not necessarily to dispatch services, but to
The stolen loads and the...
organized syndicates or whatever, around the globe.
They're somehow getting copies of these confirmations. So they could be, one of 10 players. I mean, with the confirmations, could be any factoring company, could be any dispatch service. These confirmations are going...
Exactly. And then you get a copy of one and you see how a broker or a customer or even a trucking company sets up their paperwork. And then, you've got, document editing machines.
Before it used to be complicated to edit documents.
Yeah,
Today
exactly.
It's just edit PDF and do whatever you want.
Yeah. We saw some document manipulation in our case that I mentioned earlier that really was, a critical part of how they were able to get into us for so many loads.
You mentioned something about the barrier entries to become that is just so low. Do you think a $75,000 surety bond is sufficient? I mean, how much damage can a broker cause? How many, you said yourself, how many loads you can broker out in a 30, 60, 90-day span before anybody catches on? The $75,000 bond is...
Yeah. So that's pretty low. I mean, there's two sides of that kind of debate. If you required a bond, commensurate with the full exposure that that a broker or the truck market has, if a broker were to go out of business, it would probably it'd be almost impossible to finance the working capital of a broker. It would probably knock potentially a lot of smaller brokers out of the market, which may not, it may be okay. But I think of that $75,000 broker bond the same way I think about the $750,000 public liability, auto liability limit that...
It's just not enough today.
It's just not enough. I mean, it's just not enough. And but when you require a broker, for example, to have a $500,000 bond, or the trucking company to have a $5 million auto liability policy, the shipping rates would have to triple to absorb that kind of...
All these premiums.
The premiums would go through the roof. And it would, the other way to do it on the auto liability side for trucking is to, put some kind of tort reform in place. I mean, a lot of ambulance chasing type lawyers who, want to sue the big rig accidents.
And they're getting away with it. I mean, there's
settlements.
And
exactly. I mean, it's a truck involved, accident with passenger vehicles with $1 million typically is what they have, I mean, that it's gone like that. And it's, it's a payday for the lawyer, and legitimately a lot of times it's not enough money to pay, for the real injuries that the people suffer as a result of that accident. And then I don't know if you're paying attention to that federal preemption case that's going to be heard by the United States Supreme Court in March regarding broker liability in truck accident cases. There's a federal statute that a lot in the industry argue preempts negligent selection, vicarious liability, kind of breach of duty of care when a broker hires a truck that had a bad brake inspection, or, and...
Listen, if their out of service rates are through the roof, I mean, is there liability? In my opinion, there is some sort of liability. I don't know if you agree or disagree.
That one's tough because the whole concept of the Federal Motor Carrier Safety Administration is enforcement of the safety regulations, and it's their job. I mean, they're federally mandated and funded to go find unsafe carriers and put them out of service and take them off the road. If the government's going to carry on that role and do an inspection of a carrier that this is the third truck in the last 4 days that came through the system and got checked out, and the brakes are bad and the tires are bald and the driver doesn't have his logs up to date, and then
they're now revoking
his and they just give him a ticket and send him on his way. I mean,
you think they should be revoking a lot more? Authorities?
I think they need to step up enforcement, which unfortunately, means more tax dollars to, somebody's got to pay for it. It's typically the taxpayer that's going to pay for, hiring more enforcement agents, and probably making consequences a little bit more severe, like faster to revoke the authority. Insurance companies maybe ought to, think, maybe there should be some different standards for underwriting trucking companies based on real safety record, not just claims. That's typically what insurance looks at as claims, as opposed to, the safety record that you can see in the public.
So this conversation intertwines a lot more with also the chameleon carriers. I know in the U.S. it's a lot more common. I mean, 20 years probably, we still have the same MC number that we started out with. Mm-hmm. And any carrier that I don't consult or any carrier that I don't talk to, I mean, they have 2-3 MCs in their back pocket already for a rainy day. Why is it so common in the U.S.?
One is it's pretty easy to open the next authority, barriers to entry, and it's actually easier if you've got a couple already set up, because you create the entity, you apply for the authority, and you just really plug that authority into, your existing, infrastructure of safety and compliance, as well as the insurance policies. Now, we had a couple of different motor carrier authorities here, but they were, active and really in offering specific service types, and we thought that the safety profile is different over the road. So that was our AGX carriers. Mm-hmm. And that was actually the company that we bought. Out of Rome, we then set up AGX Intermodal because we brought on some intermodal dray agents with trucks. And then one of our guys that's been with us for, 7-8 years, he does a yard spotting and local shuttle, like moving trailers around in a yard and then running trailers 2 or 3 miles or maybe 7 miles across town to another facility. And, that's a completely different kind of risk profile.
So it's AGX local, but you can also then spread it to AGX reefer, flatbed, and then...
Exactly. So it was a little bit of a branding strategy as well, which that to me is a little bit different than chameleon carrier you're talking about. It's you set up 2 or 3, you got them on the side, you run one, who cares?
Well, the second they don't insure you right away, you flip everybody into the next MC.
Yeah.
Or you keep 1 or 2 trucks there dormant, and and then start flipping the switch as it gets worse.
Exactly. I mean, it's just it's lack of resources to kind of police that. The little, I guess, what FMCSA would say, and we're a safety first mentality, or we were a safety first mentality trucking company. So we're certainly in favor of safe highways, but I think there's more that needs to be done, to to raise the safety performance of the entire industry. And, ultimately there's probably some underperformers that with a little bit more attention and consequence would maybe say, okay, we got to raise our game here if we want to stay in the market. And others that really don't care and are kind of too, they don't think of safety first. They like, if I can make a buck, I'll make a buck, but I'm not fixing those brakes or whatever.
If they only knew how much cheaper their insurance is, if you had,
Exactly.
a flawless safety record,
Exactly.
you would be spending a lot less.
Exactly.
On everything else.
Yeah. And, I've never personally driven a truck. It's a pretty serious undertaking. It requires serious people, trained people. And once you, become eligible and you're a commercial motor vehicle driver with some amount of training and some amount of, ability, that's obviously it's not flying an airplane, but it's a very, very intense, serious.
80,000 pounds is no joke.
Down the highway with passenger vehicles honking and zipping around them, and requires a lot of patience, I'm sure.
It was a pleasure meeting Mike Williams in Jacksonville, Florida, and hearing his side of the story. Well, there you have it, the story of AGX Freight. Most times when I speak to fleet owners who shut down, it's because of overspending, mismanagement, or growing too fast. But in this case, I truly believe the situation came down to a technicality that spiraled into something bigger. And when it comes to paying carriers, I do believe Mike is a genuinely good person who's gonna try to make things right. Time will tell, but character shows in difficult moments. The reality is, trucking is a tough industry. One decision, one delay, one issue with cash flow or financing, and everything can change. There are lessons here for all of us. If you have a story you think the trucking community needs to hear, feel free to reach out at sponsorship@ettransport.ca, because the more we share, the stronger and smarter our industry becomes. I'm Ronan, and I'll catch you in my next video.